Today is Saturday, January 27th. I haven't done videos in a while, so bear with me if I'm a little rusty. Everyone's talking about how the market is overheated, whether it is or not. Let's just look at some of the regular technical indicators to see if we can get anything out of that. And if you look at this chart, it is a daily chart of the S&P 500. And you can see, we draw some trend lines in there. And, they do start to accelerate here. Oops, not that one, but that one. And that, and of course, the shorter term we go, the better. Now this is a log scale chart. Now what would that look like in a linear chart? So it's even worse. Here's that kind of hockey stick shape. Even though it wasn't flat, it was a rising market, and then all of a sudden it just kicked into overdrive. And when did that happen? Well, this is not a political statement, but this is around the election. And things just kicked into overdrive there. All right, let's get back out here. So anyway, this is a linear scale, and is this a fair representation of the market? Is this really overbought? So let's put it back in the log, and even so, it looks like you can see the trend has just accelerated like crazy, even in a log scale. And look at your indicators down here. This is a 9-day daily RSI, way up there. Let's put the 14 since people are used to that one. 86.68 for the daily. Look at the weekly. Way up there at 90. And that's a pretty big number. And if we go back in time, we don't see that 90 number, except when we get here right after the kickoff of the, I guess you'd call it, technology bull market in the 90s. But even that one, just looking at the bottom right, and that never really made it up into the 90s. When you're going back in time, there's the crash of 87. Again, wasn't quite as overbought on this particular indicator. So this is unprecedented, at least in the data stream that I see, to have a weekly RSI way up there. Let's look at monthly. I'm going to delete some of these lines because they're kind of in the way now. And of course, my data only goes back here to the early 70s. So there's your last bear market. And this is what I thought was a secular bull market, bear market, and then the bull market that followed. We have one more in there. So does this look overbought on this long-term time scale? Does that look overbought? And it's a log scale. The answer is, well, maybe in the short term, but not in the long term. Now the long-term monthly RSI, way up at 88. It's been there before, right in the middle of the 90s rally. Here again, just before the crash. So just because it's overbought doesn't mean it's unusual or this overbought. And again, when it got up to this level here in the 90s, it stayed that way for years, literally years before that first bear market took hold. So let's go back into the daily time frame. This is the should be the weekly time frame. The 40-week moving average, that's your 200-day moving average. And you can see that it has spent an awful lot of time above the average without touching it, but we've seen that before. But now it's getting pretty far away from that average. And I do have an indicator. You just take your standard price oscillator and 200-day, my mistake, this was set for the daily, so let's just edit that for the weekly, 40-week. And now we can see how far above this average it's been. It really does look like it's getting out of hand here. Look at the bottom here. It's pretty high up there, but it's been there before. But when has it been there before? At the beginning of a bull market. That's not unusual. At the beginning of a recovery after a correction. Same story. So here we are at the end of a bull market, or at least late in a bull market. That's the unusual thing about this. The spread to the 200-day moving average being that unusual. Go back into the daily time frame. There's really nothing else to look at here besides the RSI and the spread to the moving average. Let's look at the Nasdaq. You get that same thing here, really pulling away from the 200-day average at the end or the late stages of a bull market. So that's unusual. The weekly chart on the Nasdaq, the 14-period RSI, 84 and change. back here before 2000, it was in the same type of level. I'm not making a prediction on that because look at this. Way back in the late 90s, it was also up there. So just because RSI is high is not a problem. But I do think that the slope of the rally is a problem, especially in regard to its average. So there you have it. Yeah, it's overbought, but in the words of a great Wall Street sage, overbought is a bullish thing. The most bullish thing a market can do is get overbought and stay that way. That's from Alan Shaw. So I'm going to look at the average, though, and the slope here, and I think that's unsustainable. And even though things look great, the fundamentals are probably pretty good, and everyone's happy, but I'm a little worried right here. So take that for what it's worth, and we'll see you next time.